Hello, everyone. Thank you for joining us. I'm Mary Albright with Cherry Bekaert, and I'll be your host today. So we're going to be talking about how manufacturers can best prepare for any increased sales tax obligations you may encounter in this post-Wayfair world. Many of you are unsure if the Supreme Court's ruling in the Wayfair case really impacts your sales and use tax processes. So today we're going to address those uncertainties and give you all the answers to your questions. And there's no one better qualified to discuss this topic than our speaker today, Lauren Stenson. Hi, Lauren.
Hello.
Lauren is the national leader of sales and use tax here at Cherry Bekaert. She has more than 25 years of experience working in the sales and use tax field, and almost all those years she has specialized in helping manufacturers. Lauren is a certified member of the Institute for Professionals in Taxation, and she's a published author. She writes the manufacturing blog regularly for salestaxsupport.com. Lauren also writes and publishes blogs on a variety of sales and use tax topics for manufacturers, and all these blogs can be easily found on our website. Lauren's a frequent guest speaker at sales and use tax seminars, as well as manufacturing conferences. So again, no one better to talk about this topic. So Lauren, thank you again for joining us today.
Thanks, Mary.
Now, before I turn it over to Lauren, quickly, for those of you who may not be familiar with us, Cherry Bekaert is one of the top accounting firms in the U.S. Recently, Cherry Bekaert acquired Lauren's sales and use tax firm, Windward Tax. So now Cherry Bekaert offers you a real team of seasoned professionals led by Lauren who can address all your sales and use tax needs. Manufacturing is a core focus industry, not only for the sales and use tax team, but for the entire Cherry Bekaert firm. We work every day with manufacturers. Our team understands your processes. We know your pain points, and we can work with you and your staff to solve your problems. But more important, we're committed to helping you manage your sales and use tax procedures on your own. And of course, Cherry Bekaert also offers an array of other services, including help with income tax, audits, and international tax. All right, let's take a quick look at today's agenda and the topics that Lauren's going to cover. This is a 30-minute webinar, so without further ado, I'm going to turn it over to Lauren.
Thanks, Mary. So the reason why we're all here today is because of the Supreme Court ruling in Wayfair. And for those of you who have not been following the case, let me bring you up to speed with a quick Reader's Digest summary. So this was a historical landmark decision, a 5-4 decision, where the Supreme Court effectively changed sales tax as we know it. The decision centered around economic nexus and the state's ability to tax remote sellers. Sellers that have absolutely no physical presence in their state, and their only connection to the state is the fact that they sell to customers in that state. So the decision came out in late June, and now 2.5 months later, states are quickly jumping on board following South Dakota's lead. Now it's all very new and the impact is huge, so we may see some changes happen at the congressional level, but until that happens, sellers must be compliant. So the impact of this on online sellers has been played out quite a bit in the media, but the rippling effect transcends to all industries, not just online and e-commerce. So what we're going to talk about today is how it impacts manufacturers. So until now, a state could not impose sales tax unless a company had a substantial connection in that state, which was defined as nexus or physical presence. And this physical presence nexus standard has been in place for well over 25 years. And this concept of nexus and physical presence, it was a thorn in the sides of all the states. They attempted for years to get around this concept, but the bottom line was always that a company had to meet that requirement of having a physical presence in the state in order to be subject to sales tax obligations. Now, states have tried for years to expand the concept of physical presence to include not only offices and employees, but also independent sales agents, trade show attendants, inventory and third-party warehouses, and relationships with affiliated customers and companies. But it always went back to a physical presence in that state. And the states always wanted that bar lowered. Why not? The more companies that had established Nexus, the more tax that they could collect. So with the Supreme Court decision, physical presence no longer became the only requirement for a state to be able to have to impose sales tax. Now, simply having an economic presence is enough. So what is economic nexus? It is nexus established without the physical presence component. It's typically measured by dollars of sales into a state or number of transactions sold into that state. In the Wayfair case, the economic thresholds were $100,000 of sales into South Dakota for a one-year period, or 200 transactions. Now, these thresholds were meant to exclude small sellers, but for a lot of companies, 200 transactions could add up quickly, even for a small company. So since this decision by the Supreme Court, states have moved very quickly to adopt legislation following South Dakota's lead to impose economic nexus in their own states. To date, 26 states have passed economic laws, and that list seems to be growing weekly. So here's the list of all the states that have imposed economic nexus and the thresholds. You'll see in some states it's both a combination of sales or transactions. There's a couple states that's one or the other, and only one state it's an and situation. We have also given you the effective dates, and you'll see that some of these laws were passed retroactively, or were passed in the past, the laws were passed in the past, but none of the states are making this retroactively. But you'll quickly see that this list is growing, and they're all starting to adopt economic nexus immediately. So for those of you that are trying to write all that down, don't worry, we've got you covered. As I said, this list is growing. It seems like weekly, almost daily. And we try and keep an up-to-date list readily available for you on our website, cherrybekaertsalestax.com. Under the Knowledge Center, under the Sales Tax Nexus charts, we can kind of show you the flow of how to get to these charts so you can stay up to date for your company as well. So I know what you're all thinking. What does this really mean for me as a manufacturer? And we're going to break it down into two components. First, the impact on sales and sales tax collection. And second, how this impacts purchasing and your manufacturing exemptions. So let's get started. So the first thing that you need to do is determine where you have nexus. So think old school nexus: plants, warehouses, inventory, traveling sales reps, independent sales reps, and this is a shocker to many, and affiliates. Then you need to look at the new nexus, economic nexus, and look at how much you're selling into that state and the number of transactions. Once you develop your nexus footprint, you need to answer the question, do I need to be registered and collecting sales tax in those states? This is where it gets a little tricky for manufacturers who only make wholesale sales. Some states will require you to be registered if you are doing business in that state, whereas other states will only require sales tax registration if you're making retail sales. So another component part of the equation is to look at your customer base and see who you're selling to. But chances are, in the post-Wayfair world, you will likely need to file in more states going forward than what you're currently filing in now. Okay, so then this leads to the question, should sales tax compliance be a do-it-yourself function? Monthly sales tax compliance requires time and resources, two things that are often in short supply with most manufacturers. And as sales tax burdens become more complex, manufacturers are going to find themselves asking, should compliance be done in-house, or does it make sense to look outside the company for resources that it can assist with this function? So think to yourself, who's going to handle all this extra workload? We've already discussed that Wayfair is going to probably increase the number of returns and filings that you have to do. So is your tax and accounting department already overworked and understaffed? Or do you have the resources, or do you need the resources to dedicate to this task, and do you need to hire employees? You know, for a lot of companies, budget season is quickly approaching, so you need to think about this concept. And all these questions, you know, they need to be decided when taking on, you know, whether to take on the task internally or, you know, looking outside, you know, to help manage this function. But the next areas to consider is also the risk of mismanagement. So managing compliance correctly is crucial. There are filing deadlines, and missing those deadlines can be costly in terms of penalties and interest. And also, if you miss the deadlines, you lose any vendor comp discounts that are offered by the state for on-time filing. So there's a lot of things also to consider. Who's going to track this? Do you have a good system in place to ensure those timely filings? You know, will you be able to handle those additional returns? And, you know, unfortunately, filing tax returns is not just as simple as entering numbers into a tax return. You know, one especially big challenge is pulling the data out from the company accounting system. The correct data needs to be pulled and reconciled, ensuring that all sales and all taxes that have been collected are accounted for. And then in many states, that data needs to be manipulated down to the local level. So there's a lot of slicing and dicing and, you know, manipulating that data, and that's always required to get the data in such a way that it's usable for filling out returns. So without the staff and the experience and the expertise in sales tax compliance, these errors can be costly, you know, in more ways than just the penalties. And another large component of compliance is handling the notices by the Department of Revenue. Any missed deadline or calculation error, it can trigger red flags in your account. And then the notices start coming in by mail, which of course takes time to respond and time to fix. And believe me, I've waited on hold with the Department of Revenue for more than 30 minutes on more than several occasions. So also with filing in more states, the likelihood of audits will increase as well. And many of you, I'm sure, have had firsthand experience working with sales tax audits and know that even the smoothest sailing audit takes a good chunk of time. So the bottom line is, with increased filing requirements, there's going to be more and more work and less time for you and your staff to spend on activities that contribute to the bottom line. So now it's a good time to evaluate whether it makes sense to outsource your compliance or keep it in-house. So while there's no right answer or wrong answer, it is a question that you should be considering in the wake of Wayfair. Now, with the burden of collecting tax across many more state lines, another factor to consider is how those goods and services are taxed in those new states. And one of the most complicated things about sales and use tax is that you aren't dealing with one set of laws like you do with federal tax, but really you're dealing with 45 different states. Fortunately, 5 states don't have sales tax, so you can cross off 5. But each state has their own laws, their own exemptions, and their own rules. So while, you know, every state provides resale exemptions, you know, where your customer is buying a product and then turning it around and reselling it, you know, that's kind of standard for all the states. But from there, it just really starts to get complicated. And different states have different exemptions based on, you know, things like how things are used, like manufacturing exemptions, or different exemptions based on the purchaser. You know, for example, exemptions for not-for-profit companies or government entities. So, you know, all these vary from state to state. So you have to, you know, have a good understanding of the new states that you are, you know, responsible and have sales tax obligations in. But you also, you know, we have taxability issues, but then if you step to the side, we also have to look at some different types of transactions where taxability can vary from state to state, but it's not under an exemption, but rather because those items are not subject to tax in the first place. So some good examples are freight and delivery and repairs and installation. These are, you know, some common things that the taxability varies from state to state. In some states, will say that they're taxable, whereas some states won't even include them in the taxable base. So it's not that they're exempt, it's that they were not subject to tax in the first place. Again, it's a minor difference, but one that complicates the whole situation. So in addition to knowing where you have Nexus and where you need to be registered and how you're going to handle those, the compliance, you also need to figure out which of the goods and services that you sell are taxable and at what rate. So that finally brings us to exemption certificate management. Chances are you're going to be registered in more states, which is going to give you more exempt customers. So you're going to need to have a good system in place to manage all those exemption certificates. And it's, with the whole new world of sales tax, it's more important than ever. So first, you need to really have a process. So thinking through the process, who's going to collect the certificates? Is it going to be a function of customer service? Is it going to be a sales rep function? Is it going to be the responsibility of the tax department? I speak from experience when I say the further you go from the tax department collecting them, the more training you're going to need in this area. You'd laugh at what some companies collect under the guise of exemption certificates. We've seen business licenses, driver's licenses, wrong state certificates, W-9s, and no joke, one colleague of mine, she said she saw a fishing license. So it doesn't matter who's responsible for collecting them. Just make sure they are trained to know what a valid certificate looks like. Another consideration that needs to be considered is who's going to manage the renewal process. Some certificates have a limited lifespan, and when it expires, a new certificate needs to be obtained. So somewhere in your system, you need to have when that certificate expires. And for a lot of your customers, you may need multiple certificates for multiple ship-to locations. So that's double, triple, or quadruple the certificates you need just for one customer. And then finally, where do you keep them and how are you going to retrieve them? The whole reason for exemption certificate management is to document your exempt sales in the event of an audit. So locating and pulling those certificates, if that's going to be a challenge, you need to fix your system. So, exemption certificate management it's so important these days. And, I really want to go a little bit deeper into why it's so important. Lack of exemption certificates has been an area in the last 5 years that we've really seen come under scrutiny in audits. It used to be that auditors wouldn't scrutinize exemption certificates so much. They would take on good faith that buyers were indeed tax exempt. Now, lack of exemption certificates is low-hanging fruit. It's where the auditors are doing gotchas. So what happens in a sales tax audit when you don't have the exemption certificate in place to substantiate an exempt sale? In most cases, the auditor will let you contact your purchaser to get a copy retroactively, but scrambling around at the last minute and begging your customers to send you the documentation that you should have gotten in the first place, it's not the best business strategy and certainly not good customer PR. You also run the risk that your customer is no longer around. They may have gone out of business, they may have been acquired. Either way, if you can't get that certificate, you're out of luck. So all this leads to financial exposure. And the way auditors do audits is that they take a sample and they extrapolate. And missing one certificate could actually extrapolate into a huge assessment. It might not look like much just on the one certificate, but extrapolate it, it's a big assessment. So then what do you do with this assessment for the tax that wasn't even yours in the first place? Do you eat the tax? Now that's a pretty sad way to spend valuable resources. Or do you rebuild the tax to your customer? It was their tax in the first place, wasn't it? Well, you could certainly take this approach, but I've never seen it work out well. Yes, you may get reimbursed, but you've done nothing to strengthen your customer relationships. And these days, when buyers have a lot of options to choose from, this is certainly not a good road to go down. So as you can see, there are a lot of best practices that I'm talking about that are nothing new that your company has to face. It's just now it's all on steroids. It's so much bigger than ever. So if sales tax was a small part of your sales or accounting practice, it will be growing. And it's more important than ever to make sure that you've considered all the implications because, like I've said, the world of sales tax has changed. Unfortunately, not for the better and not for the easier. So now I want to move over and talk about how Wayfair impacts your purchases and your manufacturing exemptions. One of the biggest challenges that manufacturers face is making accurate tax decisions on purchases. For many manufacturers, the tax decision, and what I mean tax decision is whether or not the tax gets paid on a purchase or not, it rests within the AP or purchasing departments. Invoices come in and tax gets paid, often with minimal understanding of sales tax laws and manufacturing exemptions. But fortunately, many companies wind up taking advantage of manufacturing exemptions by default. What do I mean by that? I mean that they don't pay tax on an invoice simply because the supplier did not charge tax. It's not because that they knew not to pay the tax because of the manufacturing exemption. It's that the supplier just didn't charge them tax. So what winds up happening is that tax decisions are often made out of luck, not out of wisdom. But now let's look at what's going to happen post-Wayfair. Just like you, your suppliers are going to have to comply with the new economic nexus laws. And where you had suppliers selling you products and they didn't have to legally collect tax from you because they didn't have Nexus, now the rules of the game have changed for them as well. Now you're going to start seeing suppliers starting to charge tax where they never charged tax before. So my question to you is your staff ready to make more tax decisions than ever before? Do they have a good comfort level with what's taxable and what's not? If you're like most manufacturers, the answer is probably no. And now that small problem that existed before has again blown up because of Wayfair. There's just no more getting lucky. You're really going to have your staff trained on what's covered under the manufacturing exemptions and communicate that to your suppliers so they don't charge you tax. So I predict that for manufacturers that don't consider this rippled effect, the consequences of overpayments are going to be great. And of course, that's just wasted money. So one area that I think will be extremely beneficial will be to invest in training. So it's always been important, but really now it's going to be crucial. Your AP and purchasing departments, they need to be well trained on what's taxable and what's not, what the manufacturing exemptions cover and what they don't. And they have to have a good process to communicate all that to your suppliers. And state-specific, manufacturing-specific training is really imperative to ensure that overpayments are prevented, because small mistakes repeated over and over can quickly add up. So we do a lot of reverse audits where we work with manufacturers to recover overpaid taxes. And our typical review uncovers over $100,000 in overpaid taxes. And that's usually from small purchases with incorrect tax decisions made over and over and over again. So fast forward a few years from now, I think we're going to see that number double. Wayfair's made that much of an impact, but it really doesn't have to. By training your folks and giving them the tools necessary to understand what's taxable and what's not in your own manufacturing environment will be a huge return on investment.
So Lauren, I just want to jump in here and give a brief description of some of the training options available from Cherry Bekaert. Again, our training is always specific to your state. It's always focused on manufacturing. We have two training options. First, on-site training. Our sales tax experts come to your locations. It's face-to-face training. We customize this training to address your purchases, talk about the sales tax exemptions available in your state. We use your invoices as examples, and we'll answer your questions. And of course, all attendees will receive training manuals from us. The second type is a webinar style training. It includes all the benefits of our on-site training, but in a webinar format. So this option is preferred by manufacturers who have employees in multiple locations. And as Lauren said, our training is available as a standalone project, and we also offer it in conjunction with our reverse audits and our Compass Complete assessments. So there's a little snapshot of what we offer. Lauren?
Thanks, Mary. So another option to consider is looking at a direct pay permit. And a direct pay permit is one option that's available to manufacturers in many states that allows the sales and use tax compliance to be a little bit easier. It's a special exemption certificate issued by the Department of Revenue that allows manufacturers to purchase everything exempt from sales tax. Now, that doesn't mean you don't have to pay tax. It's just you don't have to pay the tax to your suppliers. It's all paid as use tax. So if you're considering a direct pay permit option, let me go over a few good benefits. And so first is you and not your vendor controls which transactions are taxed. So there's no more worries that the vendor's correctly charging you tax or not charging you tax. Cutting them out of the equation of your tax compliance eliminates one extra layer of potential problems. Second, you can also determine the taxability of your items at the time that you use them, not at the time of purchase. This is especially helpful to manufacturers because often they may be purchasing items in which taxability, it is determined by use, and how the items will be used is often unknown at the time of purchase. Think a storeroom account. That's a perfect example. Another big benefit is that you're better able to manage your compliance by being able to review all your use tax paid at any time just by looking at what you pay as use tax on your sales and use tax return. Without a direct pay and you're paying your tax to the vendors, it's often difficult to analyze your total tax paid because you're paying so much to your suppliers and it gets lumped into that same general ledger account. Most companies don't specifically pull out the sales tax paid. So by aggregating it into one account, you can run some good reports and have a better management tools to spot anomalies or mistakes. And then if you happen to discover that taxes were paid in error, a simple adjustment can be made in your use tax accrual account. On the other hand, if the tax was paid to a supplier in error, it's often challenging to reach out to the supplier to reverse that payment. So the bottom line is you can save a significant amount of time and effort. But to have success using a direct pay permit, again, training becomes critical. Everyone must understand what a direct pay permit is and how it should be used. It's essential that the staff who are making the tax decisions know that you're not paying any tax to the supplier, so all the liability rests on those good use tax accruals. And speaking of use tax accruals, you need to make sure that you have a good use tax accrual system in place to make sure that the tax that's due is getting paid. Whether the use tax is automated by material groups or by GL account numbers, or it's done manually on a transaction by transaction basis, a good system with a proper audit trail must be put into place. Then one of the last things to consider would be looking at some tax automation to help manage the tax due on purchases, where depending on the coding or the material group that you've allocated your purchase to, the tax will automatically be calculated and triggered and reconciled between tax paid to the vendor and use tax accrued. While tax automation sounds like a miracle cure to solve all tax problems, it's not an easy cure-all. While it can be hard and expensive to implement, there's more and more tax engine companies that have good offerings in this area. But it's critical to make sure that you set it up correctly and you've taken the time to map out all the items that you purchased into the right groupings or material groups, material codes. And equally important, you've trained the users to make their selections correctly. Otherwise, it's garbage in, garbage out. So we're seeing a trend of more and more of the largest manufacturers slowly move to tax automation to handle the purchasing side of the equation, because if you spend the time to set it up correctly, it really can work wonders. So, going back to the question we posed at the beginning of the webinar, what every manufacturer needs to understand in the post-Wayfair world, I recommend 5 things. First, review your Nexus obligations in light of the new economic Nexus considerations. 2, understand your new compliance obligations and make sure you're staffed appropriately. 3, ensure your staff is well trained to understand manufacturing exemptions. More invoices than ever are going to be coming in with sales tax, so make sure they take the time to decide if tax is due or not. 4, keep sales tax on the front burner. In most companies, sales tax is often an overlooked area, and opportunities for tax savings are missed, or worse, lack of processes and lack of focus creates liabilities that rear their ugly head in the event of an audit. And then finally, ask for help. We've got a great team of sales and use tax folks here at Cherry Bekaert, and we're all ready, willing, and able to help you navigate the complex and changing world of sales tax. So please feel free to reach out to us.
Thank you, Lauren. So Cherry Bekaert, as Lauren has commented throughout this webinar, offers a variety of sales and use tax services that can help you navigate through all these new sales tax obligations, from reverse audits to assessments, training. We can help with your direct pay, permits, all kinds of things. So you can go to our website and see all of our services. We also offer a wealth of complimentary resources that are available to you. So visit our website and you'll have access to subscribe to our monthly newsletter, which is specifically for manufacturers. We publish blogs, there are charts, papers, on-demand webinars. Most important though, remember, if you have questions, contact us. You can reach out to Lauren or reach out to me, and we're happy to help you. So Lauren, I want to thank you for joining us today and offering this great advice to manufacturers.
Thanks, Mary. And thanks everyone for your time.
Yeah, thanks to everyone who participated in this webinar. We appreciate it, and we will be sending you a on-demand recording of the webinar so you can view it again or share it with other people. So thanks again for being here, and have a great afternoon.